Assalamualaikum, good morning, and salam sejahtera to everyone. Welcome to Securities Commission Invest Smart Fest 2020. Silap labor, duit lebur. Thank you for tuning in to this panel session we have for you today. We will be discussing about equity crowdfunding, or ECF, and peer-to-peer financing, also known as P2p, both in terms of how business owners out there can access financing through ECF and P2p, and also how investors can tap into investing opportunities on these platforms. Jadi untuk sesiapa yang mempunyai perniagaan yang memerlukan dana atau pembiayaan untuk mengembangkan perniagaan atau mengenali sesiapa yang mempunyai syarikat-syarikat mikro SME ataupun SME, bolehlah dengar perbincangan ini dengan lebih lanjut untuk mengetahui pilihan-pilihan mendapatkan dana atau pembiayaan perniagaan untuk syarikat anda. Juga untuk pelabur-pelabur di luar sana yang ingin melabur dalam segmen alternatif ini, kami juga akan membincangkan hal-hal pelaburan serta cara melabur di platform ECF dan P2P sebentar lagi. Before we begin, I would like to just ask everyone to answer a pop quiz we have prepared for you on Slido. This would be on the side panel of this main screen. Please answer the questions both before this session begins and also after this session has ended to stand a chance to win online vouchers from Invest Smart Fest. You are also most welcome to ask questions to our panelists on the Q&A bar, also by the side, because we will be doing the questions and answer at the end of this session. Okay, we have 4 speakers with us today from registered ECF and P2P platform operators in Malaysia. We have Chakian Poon, or KP, from Funding Societies Malaysia. Matthew from Microlib, these are your P2P guys. And we have Angel from Funded by Me, and also Cashminder or Cash from Pitch In, who will talk to us about ECF. Briefly, if you are a business owner, raising funds for your business on ECF means getting investors to invest in your company in return for your company's equity. For investors, this means you would have an interest in the company you invest in, similar in the way an investor on stock exchange holds shares on public listed companies. P2P for business owner means being able to get financing from investors, which the business owner would then repay over a period of time. For investors, P2P investment means giving financing to a company in return for repayment, which can be conventional or Sharia compliant depending on the instrument used. So let's begin our discussion today with our first question. All right, so first I would like to ask KP and also Angel, if I am a business owner and I'm looking for some funds for my company, what kind of financing can I get from ECF and P2P? Like, how would I know if my company's profile is suitable for fundraising on ECF and also on P2P? Perhaps we shall start with ECF. So Angel, if you want to answer the question.
Sure. Yeah, thanks for having me. And we are operating equity crowdfundings, helping business to raise funds for crowd to investing in the business they like and trust in. We through fundedbyme.com. So to answer your question, the first, we are looking to the potential high growth potential of the company. So with that, we will have to need the businesses or businessmen, entrepreneur to show us what makes them trust that, especially in these special times and tough time, how they can be confident to build the businesses. And with that, that will be the first for a company who looking for equity crowdfunding. There will be very high chance for them to get financing. That will by means that if you need capital to grow your companies, then ECF is the way for you to go. That's a very important point I would like to stress out. So
okay.
If I can continue.
Yeah, definitely.
Yeah, sure. The second one would be how clear or how you're able to pictures and convince the crowd investor that the investment they put in will have also good potential for them to exit, which means you can show exit potentials. Means that you're able to pictures, if I invest 1,000 in your business, after a period of, we are looking at in ECF 3 years to 10 years, so relatively patient investments, which means investor will likely to invest a long-term period. But that again, you have to picture out how you can pay back to the investor, either through yearly dividends distributions, or you have a good potential for IPO or get buyouts, or even get a bigger investor, or yourself will buy back the share.
So in terms of size, are we looking at those companies that are kind of like SME that's ready for listing, or are you looking at like really small micro SMEs, or like those that are just starting? Which stage are we looking at when it comes to ECF?
I think they will depend on the taste of the platform. So it can be varieties stage. Like most of us are looking at early stage. We are talking about a startup below 2 years old, but can be up to pre-IPO stage. So equity crowdfunding doesn't limit on just early stage or any stage. It can be any stage, but must be before IPO. That is by the guideline of what SC has stated.
All right. Okay. Thanks. So for P2P, how about like companies that are interested in P2P? And should I be at pre-IPO level, or can I be like super micro? Where are we looking at for P2P?
Yep. First of all, thanks for having us. For P2P, similarly to ECF, we actually serve a wide range of SME. So from your sole proprietor, your partnership, your private companies, all the way up to unlisted public company. And we serve SME across all sectors and all vintages. So for example, we have SMEs that have been in operation between 1 to 3 years, all the way up to SMEs that have been in business for 30 to 40 years. So we generally complement banks in giving financing to SMEs. So there are three main reasons why SMEs come to us for financing. So the first reason is because typically they don't have collateral, or they have insufficient collateral for banks to be able to finance them. So generally, these are the younger SMEs or SMEs in the services sector where they are less capital intensive. So the second reason is because banks are not able to finance certain sectors due to internal credit policy. And the other reason is because these SMEs, they require fast financing. So from our own experience and based on internal research, typically P2P is the turnaround time for P2P from application to disbursement is typically 2 to 3 times faster than banks. So it depends on what products lah. So certain SMEs, they have a project in hand and they need to know whether they can secure the necessary financing to take on the project. Hence, P2P is useful for them.
Right. Okay. So in P2P, like what kind of financing am I looking at? Is it like a direct financing offering, or can I capitalize or use my purchase order or invoice to get financing on P2P?
Yeah, so that's a good question. So I think in general, every platform has its own nuances. So certain platforms, they focus on one specific product, say longer tenor term financing or short-term invoice financing. Some focuses on microfinancing. Others, they offer a variety of products. So in general, in Malaysia, P2P, there are three main categories of product. So like you mentioned earlier, the purchase order financing. So purchase order or PO financing is to assist SMEs that has contract in hand to purchase raw materials or hire employees to complete the project. So the second product is invoice financing. So once you have delivered the project, typically you will have invoices. And most of the time, the customers won't pay you immediately. Typically, there's a lag time of between 30 to 120 days. So with these invoices, P2P can actually give you a cash advance to manage your cash flow gap. So the last product is a term financing product. So it's for general working capital purposes.
Okay, all right. Thank you so much. So, if I can go back to ECF just to kind of understand like more of like the products in which like how equities can be offered. I just want to understand, like for example, if my companies have a lot of followers, would I be able to capitalize on this? Because we are talking about crowdfunding. So how can I capitalize? Like I'm a tudung company and I have a lot of followers on Instagram. Like how can I make use of this influence?
Definitely. This actually a very good point for you to do crowdfunding, and very suitable for you to raise fund with your followers. As in, crowdfunding is not just raising fund; it's also business development. If you look at the way like when you are doing the fundraising exercise, you are actually promoting your products, right? Your teams, and that's indirectly also making people to sort of understand and get to know your brands, and who know they will fall in love. And those who are your loyal clients or your suppliers, whoever likes your products and services, they will likely want to be part of it. And because crowdfunding allows people to invest in small amount of money, we are talking about few hundreds to few thousands as an entry point. So that will be giving you a strong grip on your loyal clients. They are no longer just your loyal clients, but they're also your ambassadors, and they can promote, they will even help you to sell, like very indirectly, they will help you to boost your sales revenue. So it's a very good point. That being said, that generally, when it comes to equity crowdfunding, if you are serving wide spectrums of end user, means that you are in retail business, you are building a brand, is a very good fit for crowdfundings, and the success rate definitely is very high. For Funded by Me, there's one very interesting fact, which is if it's a women-run crowdfunding campaign, so far our record is 100% success.
Oh, nice. Okay. All right. Oh, that's good to know. All right. Okay. So great. So from the first question, we understand that in P2P, business owners will be able to get financing for their businesses. And this could be in terms of if they've got a purchase order, which can then be used to get financing, or invoice, and also for term financing as well. And also for ECF, it means that business owners are able to kind of like capitalize on their loyal clients or followers, and they could then become like ambassador to the brand, or also investors to the company through ECF as well. All right, great. So moving on to the next question. So now I'm interested to get like this fundraising through giving my company's equity on ECF, or I'm willing to take financing under P2P. What kind of obligation am I looking at? If I take investment note under P2P, is it the same or is it different from a bank loan in terms of obligation, in terms of reporting and disclosure? And also, like, what about ECF? Okay, perhaps let's answer on P2P first. KP, would you help to answer this question?
Yeah, sure. So for SMEs, the approaches for financing, I think first thing is we understand the financing needs in terms of quantum, tenor, products, and then we'll request for some supporting information to conduct due diligence. So for instance, bank statements or their historical transaction record with their customers and vendors. This is more for the purchase order and invoice financing. So once we think that the SMEs is good for it, and we'll actually put them up on our platform for financing. Once funded, P2B is actually a debt instrument. So similar to other debt instruments, the SME will actually need to make periodic repayment as per the terms agreed earlier. And since most of the financing is given out on an unsecured basis, we also will usually require a personal or corporate guarantee for owners and shareholders.
Right. Okay, great. So in terms of ECF, like what sort of obligation will be imposed on me, and how would fundraising on ECF impact ownership or valuation of companies? So perhaps this question, Cash, if you would like to answer it. Cash, I think you need to unmute.
Yes, yeah, sorry. Yeah, I went with that. Yeah, I'm happy to take the question. Yeah. So with regards to equity crowdfunding, this is actually one of the really positive things about investing with a crowd, because when companies come to us, they are able, investors, when they look at the companies, they are not alone, right? So they'll be looking at it along with the crowd. So in many ways, the platforms that serve these companies, we are then obliged to a certain extent to look out for the investors. So based on that, the companies that come to us, they will obviously have to disclose. When you come and raise money from an equity crowdfunding platform, you are asking for equity from the crowd. And obviously, since you're going to give out equity to the crowd will want information, right? So there's two things that I think they will have to take note of. One is that when a company comes to us or to any equity crowdfunding platform, we will have to carry out due diligence on them. So the company will then be obliged to share its corporate records. They will have to share their financial records, their projections. You typically have a pitch deck so that you can then tell investors why you should invest in them. But really, a lot of the work is done at the back end. In fact, you can say that the investors the platform do the work on behalf of the investors by checking out the company. So that's one obligation that obviously all companies will have to do when they come and raise money from an equity crowdfunding platform. And then going forward, since you have raised money and you successfully got your capital that you need, you now have new shareholders. And if you have new shareholders, then obviously you have to report to them. So then we do mandate, like at Pitch In, we ask issuers to actually report every quarter, right? It can be a simple report and maybe more detailed reports maybe twice a year, but every company will then have to report back to the investors. That's how investors then can keep track of their investments. Right? So that's something that is really quite interesting about equity crowdfunding, because in many ways, the job for the investors is done by the platforms. Right?
All right. Okay, thanks. And I feel like you mentioned just now. So one of the obligations that's on me would be like preparing my deck, the pitching deck, and also kind of like getting the financing, which means that I would have to disclose certain things before I get on the campaign. So I think now is the right time to ask this question. So if I feel like ECF and P2P is right for my company, right, and I am ready to do the fundraising, how do I know like my company is ready? What should my company be equipped with in order to make the most of fundraising on ECF P2P? And like, how can I make the process easier for me in order to, get through the campaign and also getting that financing? Perhaps, Matthew, would you like to answer this one for P2P, please?
Yeah, sure. Just to add on to what KP was mentioning before, the main thing is obviously you need to get your in order, that's for sure. For Microlip's case, we do a Q&A as well, so you get to know who you're investing in and what your objectives are, so on and so forth. If you hit our website, you can see that. But more importantly, we also must be prepared to get back to our ops team for metric testing and a few other things that we need to be ready for the issuer side. So that's on our, and of course, for Islamic, we do have a Master Commodity Murabah agreement. Do need to run through, check everything, all the details, and then if need be, sometimes hand for us to do for each step to understand what exactly the commodity Murabah trade is going to be like, and so on and so forth, the contracted profit rate and so on and so forth. But yeah, we will do literally step A to step Z together with the issuer.
And like, do I get support from operator in this? Like, for example, if I am a small company, like, I'm a 2-man company or 3-man company, I'm not used to be having like, record keeping and accounting. Perhaps, like, how do I know like I can meet your standard?
Great question. If I can speak for, at least for Microlip, at least, we do have basic debt management and accounting training, both in English and Malay. So that will help quite a lot. And we make sure that they pass that before they do anything. That's one. But we also do provide sample documentation, like what you pointed out. Some of them are just straight up Boku 555. And we've changed Boku 555 into basic debt, basic accounting statements like the balance sheet, and even that also they found really cool. This was also mainly after the video training like NSS as we call it. So that at least gives them a bigger fuller picture. We get that, ask them to shop sign, then that would be considered their sign management accounts. This is especially for those who are literally just using 555 until today.
Right. Okay. So from Microlip, what I can expect is like some sort of training in order to get my record keeping in order, so that I can make sure that the information is disclosed properly. All right. How about how about for ECF? Like, what sort of preparation should I do before I go on campaigns? Like, Cash, if you'd like to take it.
Sure. Yeah. I think, as mentioned just now, since there's a certain disclosures required, then you will have to prepare your company by getting your documents ready. But getting your documents ready is something that's not too difficult to do. Although we do come across companies when they come to us, maybe their record keeping may not be so good. So we do give them some advice. But I think the most important thing is that a company, when they want to raise money, I always tell them, to a certain extent, if you think you're investable, then you're ready for crowdfunding. But then you will then have to carry out a marketing campaign and reach out to your investors. And for you to do that, then definitely you will then have to look at how you can make yourself ready for investment. And what happens is that when they come to pitch in, for example, we have our team of people will always sit down. And I think the first 2 meetings or so are very, very crucial, because we do assess the company as to what's how ready they are for crowdfunding, and then we help them to identify possibly the gaps that they need to sort out. Some of them may require some restructuring of the company shares and all that, so they have to undertake that. But otherwise, then we help them to also understand how best to prepare their company documents in a way that investors can easily understand their offer, easily understand why they should invest in them, and also be prepared to then take any questions that investors may have for them. So we sort of prep them up. But also, I also want to stress that over a few years, 4 to 5 years now that we've been doing equity crowdfunding, a lot of experience has been gained by various companies, right? So, for example, at Pitchin, I think we are now approaching about 70 companies that have already raised funds successfully. And one of the good things about many of the founders of these companies is that they themselves are ready to actually help other companies to raise money, right? So
Oh,
we have,
okay.
I think you can say something like an alumni network, right? So these people, they
Okay.
are always ready to guide other people, right? So we do find it quite useful sometimes to sort of point some people and say, hey, look, your company is of this kind of industry. Let me introduce you to this founder who has just raised money recently. And he can also probably guide you in how you can also be able to be successful. So we do find that a lot of networking is useful, and along with the help that the pitching team puts together along the way of getting your documents ready, all the way to a marketing campaign, I think proves quite useful.
All right. Okay, that's great to know. What if I'm interested in Sharia compliant investment? Sorry, Sharia compliant financing. Like, what are my options out there? I think anyone can take this if.
Yeah, I think what we do recommend, because to the companies that want to do any Sharia compliant deal, is that we work with partners who can then help to assess and see whether their deal can be Sharia compliant, right?
Mm.
So we do tell them that these are the requirements that you need to speak to some of the people that we know, get your deal certified to be Sharia compliant, and there are some processes at the Securities Commission too that we have to comply with. And if that's all done, then obviously the company can then go forward and promote themselves as a Sharia compliant deal.
All right. What about for P2P? Like, what are my options in terms of Sharia for P2P?
Yep,
Yep.
that's quite straightforward, I think, on P2P side. There
Yeah.
is a Sharia compliant list, or not, is that you need to, or non-Sharia compliant list rather, that as long as your company is not in one of those non-Sharia compliant list industries, you'll be fine. Alcohol, gambling, so on and so forth. As long as you are not there, then in any case, for my colleague's case, we have to check with our Sharia advisors as well, because some companies may fall in the gray area, and we need their go ahead, which we normally go for every single issuer anyway. But it's to make the process simple. On the FAQ side, there's a simple drop-down list that you can see and make sure that you're not one of your particular.
Right. So okay, it's quite clear there then. All right. Okay. So for ECF, I've understand that there's also kind of like a ongoing continuous obligation to your shareholders in the sense that for holding that ECF note. What about for P2P? What is my continuing obligation to those who hold the P2P investment notes for my company?
For the issuer, obviously, Kautsa, that it is a debt instrument. Actually, KP
Yeah.
is as well.
Yeah.
So just like the bank, you have to pay the bank back every month. Similarly, you must be ready to be paying back your P2P investors every month. So, which of course now with COVID and all that, I think it's safe to say most platforms we're trying to be reasonable, and obviously we try to jaga hati issuer as much as we jaga hati investors. You know, we'll waive late fees if need be, and so on and so forth. I mean, I think it's safe to say all P2P operators and ECF operators have a heart, but at the same token, I think, there's a responsibility on the issuer side for P2P that they need to be ready that, okay, yep, once I take on this financing, I must be able to meet my monthly payments.
All right. Okay. So
If I can just
yeah.
add on the
Yeah.
investor side, right? So for P2P on the investor side as a platform, we'll be monitoring the repayments on behalf of the investors. So all the information will also be provided to the investor via our online platform. So in the event there is any delinquent or any defaults, we'll actually follow up with the issuer to try to understand what is the cause of the delinquency. So
All right, okay.
if there is a valid
Likewise.
case,
Oh, sorry.
So if there is a valid reason, we'll try to restructure or come up with a repayment plan for the issuers.
Just to add on as well, likewise for us, I mean, the main thing is even on the Islamic side, we have that contracted profit rate for that very reason, so that in the need for restructuring, we can do it within the same investment note. There's no need to recall the investment note, so on and so forth. And more for the both Islamic conventional and similar to what KP mentioned, I think it's fair to say platform operators definitely want to have that conversation. So even if they're just late, not default, just late, we will already make the calls, try to follow up, see where we can help, what we can do, what's the assistance that can be provided. I think it's safe to say the operators all have the same wavelength.
Okay, all right. Okay, thanks. So just to kind of like wrap this up, right? So in order for example, like I'm a business owner, and I want to get on ECF and P2p financing. So the business owner needs to make sure that they've got record keeping. They'll be expected to kind of like do a pitching deck in order to fulfill the campaign obligation. But at the same time, they'll be able to get like support from platforms as well, from the platform operator, where they can give support in terms of like network and alumni to get like help and mentoring, and also things like like how to make sure that the deck and also my finance record are all in order as well, right? So all right, okay, so that's for business owners. So right now we're going to talk about the investment opportunities for investors interested in ECF and P2P. So for example, if I am an investor that have only been investing in unit trust before, and now I'm interested to invest in ECF and P2P, what should I expect from investments in ECF and P2P? What are the risks I need to be aware of, and what kind of return can I expect? So perhaps Angel, you'd like to answer for ECF.
Sure, thanks. In terms of comparing unit trust versus equity crowdfundings, I suppose they are both patient investment. So the channels investment we are looking at, especially for equity crowdfunding, especially you are investing in early stage startup, we are looking at a minimum of 3 years to can be up to 10 years. Averagely, I must say 5 years. That will be the meat of I'll be comfort to say 5 years as the patient's investments. And by knowing that, is also like unit trust, first few years, you probably get negative or very minor earnings, if I make it correctly. And for equity crowdfunding is different in a way that you're investing as a shareholder. So as a shareholder of the companies, you sort of play a different role, because you have to support your own company. In fact, this is your own companies, and you can't say you don't like your own companies, and then that kind of sentiments. First thing first, and of course, if you're lucky, you invest in very high revenue or high profitable businesses. That will be also a later stage, which means you're paying higher price for that, because if you're investing in early stage, you probably get in a very much lower valuation, so which means you pay lower price than bigger companies, higher price. I think that's a fair structures we are looking at. And but definitely it's a high risk investment, and which means when it is high risk, high returns. So equity crowdfunding can be very excited return. We are talking about easily 100% to 1000%. And I want to borrow the one of the best deals I can know in the historical, like when you are investing in a high growth, high potentials, very sexy business model startups like Facebook, Alibaba, and if you are given a time, because crowdfundings are democratized, retail investor can now investing in a good and potential startup. We are looking at 1000%, like more than 1000% return. Of course, we are not so greedy, right? But if I would to say few 100% returns in few years is very normal. I must say 100% 100% onwards.
Right, that
Right.
that does sounds like really exciting. Just to ask, like, so for ECF, like, what's the minimum amount that I can invest in, and like, what's the maximum amount? Right,
Sure.
if I'm
Before
a
I go
retail
into that,
investor, yeah.
sure. Before I go into answer your questions, I do not want to make my statement excited people. Then all of us will put in all the saving in that. So always the golden rules. High risk, high return. So do not put all your investment portfolio in equity crowdfunding. We are talking about 10% to 20% in my personal. This is my personal investment patterns for high risk returns. And yeah, back to your question. So. Different campaign, different platform will give different entry point when it comes to minimum investments. Like for us, average at 500 to 1,000 as a minimum investment. Also depends on the stage of the company. Yeah.
Right. Okay. And for retail investors, there's also a maximum in which they can invest on ECF, right?
Yes.
Sure. SC actually have equity crowdfunding guidelines, same as other register recognized market guideline as well. So to us is as a retail investor per campaign, you're advised not to put in more than 5,000, or
Right.
if you are sophisticated, try to keep to, even you are very rich, try to keep below like 50,000. That again will fit to what I'm just mentioned, like 10 to 20% of your total investment portfolio.
Right. Again, it goes back to the whole don't put all your eggs in one basket kind of tips for investors, right? To be,
Golden rules, always.
yeah. All right. Okay, great. So what about for P2P?
Okay, sure. For P2P, I think it's basically as Angels mentioned, our minimum is only 50 ringgit. So
Okay.
has their own minimums, and maximum, of course, yes, strongly encouraged to cross 50, no matter 50K, no matter how wealthy you are. But coming back, basically, we do have some mitigation when it comes to our P2P investors. We do have micro insurance that covers the principal in the event, say, a food truck driver, one of our target market guys, get into an accident, breaks his arm, then at least still got 40K left or 50K financing, Islamic or conventional. The entire 40K is protected by it's covered by our micro insurance and paid out to all the respective P2P investors. Also, when it comes to I guess managing the risk, it's the same case, I guess, for all operators of ECF or P2P. Diversification, as Danny has mentioned before to me as well, and on a separate platform. The main thing is, like, it's even on our investment notes of, say, 5-10 investment notes, spread it out. If, say, you've got 10K, maybe you put 1K on each, so on and so forth. That automatically you build up a portfolio just on my colleague's platform. Likewise, if you build it with other platforms, that'll be the best way to go. Spread out your investment across, And
Yeah.
I guess very important is make sure that you check who are the licensed operators. Cannot simply go on to some, what's it called, cowboy operators. Thankfully, in Malaysia, we're strictly regulated, so that's good. Then I guess, our average returns would be anywhere between, because as we're in the microfinance sector, it's anywhere between 10 to 15, but based on their credit rating. So, it's after our credit assessment and credit scoring, and they will fall either low risk 1 at 6% or high risk 10, which is 18. But so far, we've only taken low and medium risk, and on that note, our average returns are anywhere between 10 to 14-15%. But unlike the case of ECF, we do pay out monthly. So I think that's the same for all the P2P operators. That's a big advantage,
Right. All right. Okay. So I like how both for like all the operators are saying that I should be careful. This is early stage investment, so it's high risk, high return. So I should be aware of that. So how is my interest as investors protected then, like on ECF and P2P? How am I protected, for example, in event of companies default? Like I am investing in early stage companies, the economy is facing some challenges right now. So how do I what are the measures put in place by the operators to make sure investors are protected in times like this? So perhaps Cash, you want to answer for ECF first?
Yeah, I think that will have we'll have to make clear to all investors that as far as equity crowdfunding is concerned, as what Angel has just said, it is a high risk investment, right? And again, just mentioned just now, you are a shareholder, right? You are not, I would say, someone who has lent money, right? So you are a shareholder of the company. So if the company were to face difficulties, you will probably be on the same level as the owner of the company, who's another shareholder, right? So you have to take the hit along with everybody else. But having said that, I think two things to point out. One is the very fact that equity crowdfunding, which is a regulated activity in Malaysia, right? What happens is because these operators, all of us, we watch out and we sort of like screen the companies when they come through us. You can say that not every company ultimately goes on to raise money, right? Because through the process of, I would say, filtering, we do find the companies that are most suitable to raise money. So in to a certain extent, your chances, especially of a total company failure, is not very high, right? I think speaking for my own platform, right? So we've got like 70 companies that have raised money and over 4 years. And you know, that typically people will say when it comes to startups and SMEs, the failure of a SME or startup is at 90%. Well, that's not true as far as equity crowdfunding is concerned, right?
Okay.
I would say over 90% of our companies, in fact, nearly 99% of our companies are doing well and are still around, right? So your chances are limited. But in the event of a possible problem, then of course, as an operator, we will then sit down and we'll talk with the company and see whether things can be salvaged. And I can use the pandemic as a good example. There was,
Right.
and we have to be very transparent, right? The pandemic hit a lot of companies. So there was a company on which that was hit very badly by the pandemic, simply for the reason that when you have an MCO, you can't come out. When you can't come out, you can't do any business because that business of that company was actually dependent on people being able to move. So the company faced almost total failure. But uh, after speaking to us, instead of shutting down the business, they just paused the business for a while to assess what they can do. And I'm happy to say that after a little bit of maybe speaking to us and of course to other mentors and all that, after the MCO, the first MCO was lifted, that company was then able to find another niche in the same area, right? And they were then able to restart their operations. And that company has today already gone on to become operational again, right? So I think these are the kind of risks that you have to face. But I want to echo again very, very importantly, if you come to equity crowdfunding, there is no need for you to take all your money and put only into one equity crowdfunding deal, right? Since as
Yeah.
Angel mentioned, it's highly likely you will get very high returns if your company does very well, right? 5, 10 times is not a problem. It will happen, right? But then the chance of failure is there. But if you take your money and you spread it among some deals, so touch wood, if only one company were to do badly, but 4 companies do well, I think you would have made many, many times your investment. So the important thing is to diversify and be very level-headed and not just pick on just one company.
Right. Okay. All right. I just want to ask, like on ECF, like when you were mentioning that, this company going through difficulties and like, trying to get back up, right? Are investors involved there? Like, are there like disclosure given to investors at that point?
Yes, of course, because you have to report, and we make it very, we stress to the company that if you come and you raise money from the public, you have now new shareholders, and because you have new shareholders, you then have to keep them informed. You've taken their hard-earned money, right? So
Yep.
in that particular case that I'm referring to, and also in any other cases, investors normally know what is happening. If they will hear of the good news. For example, many of the companies that on our platform have gone on to raise higher rounds, sometimes from VC or at higher valuations. The investors are always told beforehand that this is about to
Right.
happen. So similarly, when this company had faced a problem during the pandemic, they actually they consulted with us first, and then after that, a communication was sent to all the investors. The investors were then able to also share their views and give some suggestions. And I must say, I what's good is that because everybody was aware that this is not something of a it's not a scam, right? So the company was operating, was doing well, and then the pandemic hit. The investors were very understanding, and they gave space to these companies' founders to actually see what can be salvaged and what can be done. And I think by now, a few months later, they all must be very happy that the company has restarted operations, and not only restarted operations, but beginning to gain back some of the traction.
All right.
But yes, they were kept informed.
All right, that's great to know. All right, so moving on to P2P, how am I protected on like an P2P platform?
Yeah, just want to correct one perception. So for P2P, we are not only funding early stage company. Actually, we have a
Okay.
lot of companies who have been operating for around 30 to 40 years. So they
Okay.
already have regular businesses and whatnot. So I think P2P, like what Matthew has mentioned earlier, is relatively boring if you compare to ECF. But what we are aiming for is a stable and regular return. But higher than your normal FD and whatnot. So on a well-diversified portfolio, at least speaking on behalf of funding societies, we are targeting mid to high single digit per annum for investors. And this is actually, so we run a study on our own investors portfolio recently, and we have achieved that. So similar to ECF, we do conduct credit writing on all our issuers prior to putting them on the platform. So we will request for information like the financials, the directors and owners credit profile, financial standings, etc. And all this will be put on a fact sheet for disclosed to investors to help with decision making. So in the event there is any delinquency or defaults, we will actually engage the issuer to see how we can help. If it's a genuine case and we think that the SMEs are still creditworthy, what we'll do is we'll try to restructure the financing for them, of course with additional return for the investors. So in worst case scenario, touch wood, we will initiate legal action against the SMEs. And investor will be kept notified on the status via email, on our website, mobile, etc. And of course, COVID-19, I think we do know that SMEs are most impacted. On that front, we have actually refined our credit underwriting to protect investor investments.
Right, okay. All right, I feel like I am ready to invest on ECF and P2P now. So where should I go? Yeah, I'm convinced. So like where should I go to make this investment? I feel like there are measures put in place to protect my interests and understanding like the risk involved. So like how I would just want to understand then like what should I be aware of when I read the campaigns? Like where should I go to invest, and like what should I be aware of? Like what are some of the tips that you would share with me as a new investor of things that when I read I should really pay attention to it when I make to make like a good investment decision? Perhaps Angel, do you want to answer for ECF?
Sure. So first thing first is to make sure, regardless of equity crowdfunding or peer-to-peer financing, the platform that offer you the investment must be stated very clear in SC website, which means they are regulated and licensed by SC. So this can be easily browsed through the SC websites. Then this is very important, and you are 50% successful already, I can rest assure you. And then personally, when it comes to equity crowdfunding, I would like to highlight on a valuation, because as in any money outs, right, you're paying a price. So valuation is the price that you're paying off at that moment. The valuation is the value worth of the companies. And then you will be posed back the questions like, oh my God, valuation is sounds sophisticated. I'm just a normal investor. I just want to invest.
Yeah.
So how So yeah, I understand that there can be a challenge for rich investor to understand that, but let's make it like very common sense. Okay, if the companies are just starting off, and then when you look at the documents and the statements, you know that they just operated for less than a year, and what is that means for you? And when you also look at the revenue, so they are focused at, let's say, a revenue of 250. Let's just make a round numbers, 200,000 revenue.
Okay.
And if they are looking at 50 million valuations, is it sounds common sense to you? So that kind of thing. But I can also understand that there can be a very sophisticated, very tech savvy, and very high tech and a license can be increase the valuation. Many factors can increase the valuation. So if it's really something that you have you have really no ideas, you don't know what you get into, my suggestion is let's wait and don't get in, because the golden rules is also knowing what you are getting in, right? Or know what you are investing in. So yeah, that's the first thing. The second, the last one I want to stress on is equity crowdfunding, patient investments. You should invest the fund that you probably will put in. You don't need for another 5 to 10 years.
Okay.
And you also have to bear the risk to lose it, because equity crowdfunding, there's no guarantee of capital.
Yeah.
That makes sense for a high risk investments. Yeah, so that's about briefly I would like to share on that.
All right. Thank you.
If I can just jump in, Kausa, very quickly. I think the other point to make is that even in equity crowdfunding, there are all kinds of deals, and there are all kinds of, as mentioned by KP, even all kinds of stages of company. So the point I'm making is that even when you come in and say, what kind of deal is for me, ask yourself, one, what kind of risk you have, because there are some companies that come to us and they will be doing more safe ventures. They're already profitable. They are even promising dividends. So your investment is very safe, but your chances of a capital appreciation is not very high, right? So if you're willing to take a less risk and you get less gain, those companies are there, so you can check them out. If you're willing to go for a very high gain, then you can invest into companies that are virtually going to go like technology startup that are really aiming to go and become many X in returns, right? But again, the risk for failure is there. So you can sort of check out by looking at all the different deals. And I do suggest to a lot of people is that there are places to ask questions on the platform. You can do that, or also get to know other investors and learn to talk to each other. Then you can figure out what kind of deal is suitable for your risk profile.
Right. Okay. Interesting. Right. What about for like when you say that I can talk to other investors or like talk to other people, does this happen on the platform, or do you mean like checking it out elsewhere on my own?
Okay, so previously, obviously, before the pandemic, I think all the platforms used to have a lot of events, right? So pitch in, we've done lots of events, and I know my fellow operators have also done lots of events. And at the event, people get to know each other, right? So there is informal networks begin to form, and many of these have now moved online at Zoom, right? So what we have noticed is people do connect with each other, because on the platforms you do have, like for example, at Pitch In, whenever there's a deal going on, you can ask questions, right? And then people can also answer your questions, and then people begin to get to know each other, right?
Cash, if I can stop you there, right? So when you say like when they are pitching for the campaign and it's happening online, this is happening on the platform.
Yes, we right now we have sessions that we use tools like Zoom and all that, right? So we advertise it on our platform. The deal is on the platform, but then we'll advertise a particular event, say a company or maybe even a combination of 3 or 4 companies. They will then pitch at a Zoom event, and people sign up and they're on the platform. So the company is actually pitching to a live group of people, of investors, and the investors can ask them questions.
All right, great. Okay. Okay, so what about for P2P? What sort of like what would be like the best way to invest on P2P, and like the information I should look out for?
Yeah, sure. I think I can speak for Microleap, and similar as KP mentioned with his fact sheet. In our case, similar to a few operators as well, we do keep everything on our investment note on our website itself. So on the funding list, click on any issuer, PKS Micro, and you will know exactly this particular company, what they do, who they are, what's the business like, they've been in business for how long, etc., etc. But I think the important part to highlight is the credit rationale, because all of us, all operators are linked to credit bureau, and they do give the PD score, which is probability of default, together with our own rationale on why you should invest in this company, and so on and so forth. Guarantors are there. Some operators, including ours, we do need a guarantor. Whether it's a personal, it could be themselves. So that is something also as an investor you should look out for. Because everything else is actually pretty straightforward. The term sheet will tell you exactly what it is. all agreements and everything will be within your investor profile when you are sign up as a group investor. All these things are there. I guess the main takeaway is the credit rationale, the getting to know the issuer within the fact sheet / is our term sheet, and including our website, because our notes actually give a bit of a Q&A. So you get to know Islamic, is it compliant or not, etc. The whole nine yards are there lah.
Right. So basically, it's very important to read through all of the campaigns and see if it suits your profile, see if it suits your own risk ability to take on that risk. All right. Okay.
I can just jump in one last
Yeah,
bit.
sure.
The most important bit is actually the most consistent way to make money in P2P, from what I heard ECF also, is to diversify.
Yes.
So some investors will notice that after they read the fact sheet, somehow they feel very confident, they like the company a lot, and then they start making high conviction call where they put a very large portion of their investment in that particular SMEs or issuer, and hence very often that's the profile of an investor that will lose money eventually.
Oh, I see. I mean, I guess a campaign pitching is meant to be very enticing. So I guess like it's natural for example, like investors to then feel secure or feel attracted to it, because obviously it's meant to be enticing, right? So what you're saying here is that you should then be very careful about it as well, like kind of like
not really. Our fact sheet is actually quite boring. A lot of numbers.
Oh, is it?
Yeah, but I think after the investor read it, maybe they feel very comfortable with financial or whatnot. They start, making high conviction call. But I think at the end of the day, they still need to remember to diversify, no matter how much they like the company. Unless it's your own company, then feel free to put all in, right?
Yeah, exactly. Also, just to add, and I think Angel already brought up this point, please go, even on our website, we have a hyperlink to SC's list of recognized market operators. Please make sure that before you invest, check that you are investing in a license, in a recognized market operator, such as all the P2P operators and ECF operators. So there's a link that clearly says SC.my, blah, blah, blah. The whole list is there, including the digital asset exchange, the whole 9 yards. Make sure you know that these guys are the, approved and recognized market operators before you invest.
All right. Okay, so for investors out there, so the main point, I feel like if we can take away some points from here, it would be, first, make sure you are investing on the right platform. Make sure the website is right. Make sure you are dealing with the right companies. You can go to SC and also check on whether this company is registered and make sure they are before you make your investment. And then secondly is to kind of like know yourself as an investor, what sort of risk you are able to take, and also what sort of return you are looking at as well. And also, of course, to not put everything in one basket, like KP say, no matter how comfortable you are, make sure to diversify. All right. I think that's a really helpful session for me to begin investing on ECF and P2P. So let's take some questions from the audience. So now we can begin our question and answer session. Okay, thank you so much. Hi. Okay, so let's go on to our first question for the question and answer session. The first question that we have is, what is the best investment today with the economic instability arising from the pandemic COVID-19? So perhaps the panel would like to answer in terms of ECF and P2P on your thoughts on this question.
Sure. Okay, I'll start first. I think the old rule of always diversifying does not change even when there's a pandemic. So people should still diversify their investments. But having said that, I think in terms of the short-term impact, the pandemic is very high. But don't forget that this is a great time to invest for the long term, right? And for the long term, I think people should consider ECF and P2P too, because many of these companies are the new companies. They are growing. They've been around, and many of them have benefited in certain ways from the digitalization that's taking place, right? So again, diversify, but also look at the deals that are coming out on ECF and P2P platform, because many of these companies are the ones that are growing fast, maybe as a result from the pandemic.
All right, okay, thanks. Does anyone else want to jump into that question, or shall we move on to the next one?
Yeah, I can just quickly jump in as well. I feel, yes, we are in a position to help those companies that exactly, I would like to echo what Cash said, because diversification is one. But the product offerings that we have and the different pivoted companies that we want to support, because these guys are really, I would say, doing their best to make sure that they're ready to take on new financing. Because I think it's fair to say that ECF P2p as a whole, we're obviously credit scoring them quite strictly now. So we want to make sure that the ones who are worthy, or basically are credit worthy, are the ones that should be getting your support. And don't forget, they do pay monthly. Yeah. So
yeah.
that's a beautiful thing of how SC did the alternative investment or alternative business financing too.
All right. So, and moving on to the next question, like with COVID-19 and continuous RMCO and CMCO, we hear a lot of SME closing down. So this person is asking, isn't it very high risk to invest in a P2P financing scheme right now?
Perhaps I can take the question.
All right, sure, KP.
Yeah, so I think it's anecdotally, SMEs is most impacted by COVID-19, mainly because of the slowdown in economic activity due to MCOs and CMCOs and whatnot. But also at the same time, the operators are cognizant of this fact, and we have actually adjusted our underwriting or our credit due diligence approach to actually take into account the impact of reduced business activity during COVID-19. At the same time, interestingly, because of RMCO and CMCO, a lot more better quality or good credit-worthy SMEs are also coming to P2P for financing. Hence, there is actually an opportunity to invest in safer SMEs as well.
Okay. Perhaps for ECF, Cash, if you want the answer. Oh, sorry. That question was for P2P financing scheme.
Yeah.
So sorry about that.
Can I just add quickly?
Yeah,
so,
sure. Sorry about that.
The mitigation that P2P operators can do or are doing, basically some of the safeguards, like we provide microinsurance, so covers the principal in case anything were to happen to the key business owner, of course in partial disability or death. But yeah, so there's that, and also we do ask for guarantors similar to a few other P2P operators. So that's the mitigation we can do, but there's no such thing as a guarantee.
Right. Okay. Right. Thanks, everyone. There's a few questions that people been asking on the question and answer panel, which is what is the minimum amount that can be invested in ECF P2P? I think let's just put it out there. Perhaps someone can just answer what is the minimum amount and also the maximum amount a retail investor can invest into ECF and P2P.
Okay. As far as ECF is concerned, I think when it comes to minimum amount, theoretically there's no minimum amount, but I think the point to make is that every company that comes to the platform and wishes to raise money, they will then craft their offer. And when they make up their offer for the investors, they will always typically place a minimum amount for investors that they were willing to accept for that particular investment. So say, for example, on Pitch In, we will have deals that will go as low as maybe even 1,000 ringgit, or some of the investment deals will go as high as close to 5,000 ringgit. And the reason why this is so is because the minimum amount which SC guidelines have set is actually 5,000 ringgit for retail investors. So typically, if you were to answer very broadly, I would say you can invest between 5,000 ringgit and below, depending on the deal which is set by the company itself.
Right. Okay. What about for P2P?
Generally, for P2P, minimum investment per campaign differs by platform. So for Funding Society, it's 100 ringgit, but there are some other platforms with different minimum amount as well. There is no maximum, but generally, we do indicate in our crowdfunding what is the recommended maximum amount per investment node. On a portfolio basis, I think retail investors are not, generally there is a soft limit that says that retail investors should cap their exposure to P2B within 50,000 ringgit.
Right, okay.
Yeah, actually that's also just to add, in our case, it's 50 ringgit minimum. And we also have 10 ringgit microlip credits that they can use. So technically 10 could be the bare minimum. But the other flip side is, yes, to echo what KP has said, is basically there's a soft limit of 50,000 per P2P platform for retail investors. and no limit for sophisticated or accredited investors.
All right, okay, noted on that. So next one, I think this is quite interesting. What are the differences between VC and ECF? As a startup, which one would be best to go for? Does ECF consider seed funding for very early stage startups? Perhaps Cash, you wanna take this one?
Sure, sure. I think when it comes to understanding VC and ECF, there's 2 points to make. One is, yes, VC is basically a funding company that has gathered a large amount of money and then they want to invest into companies. And typically they invest large amounts in one go. So a VC would typically invest probably 7 figures into larger startups or more. That's one. The second is, of course, ECF, as you have just heard, allows democracy to work in the sense that it democratizes the funding ecosystem. Anybody can invest from small amounts to large amounts, right? Having said that, I think another point to make is that there should be no conflict between VCs and ECF. In fact, on deals on pitching, VCs have also come and joined the crowd and invested together with the crowd. So I would look upon them as complementary funding sources. VCs and the crowd are all available for startups. As to which one should you choose, I think you will see that in terms of growth of a company, VCs tend to invest on their own on larger deals where they've gone through various stages of traction and all that. So if you're a bit more early stage, obviously ECF is the way to go. And if you're a bit later stage, then yes, probably consider looking at both VCs and ECF. Another point to make also is that if you are looking for faster funding, ECF is a good choice to look at, because we work quickly on deals, and sometimes when it comes to venture capital companies, the due diligence process may take a bit longer. In terms of what kind of companies, as very early stage companies, can startups apply? Yes, any company can come and raise money, right? So even if you're a startup, please come and talk to any of the ECF platforms. The most important point to note is that, are you investable? Are you attractive to investors? And revenue may not be the only point that investors look at. They will also look at things like your traction. They will look things at how unique your idea is. But most importantly, talk to an ECF platform. They will probably be able to guide you, and you'll be able to understand, are you investable?
All right, okay.
I would like to also add on, if I may.
Sure, sure.
So, yeah, speaking about VCs and ECF, right? And which stage of company? So, in growing companies, there's very frequent. It happens that the fundraising exercise will happen several rounds. And in Malaysia and out of Malaysia, there are different kind of VC as well as ECF types. So every platform and VC have different tastes. That means say that there's already in now stage, there's no significant difference between VC and ECF. It's just a matter of which VC suits the taste of the stage of the company. Some VC may like to have even idea stage, and some ECF platform players like us, we like to have a pre-IPO or a certain revenues streams company. So it's just the companies, which stage are you, and never forget you will go several rounds doing your fundraising exercise. So just keep the options open and treat ECF as one of the alternative or one of the choice, or maybe in future a mainstream of fundraising.
Right. Okay. Thank you for that. The next question is also on ECF, so I'm gonna keep Cash and Angel on here for a while. How do we determine capital appreciation in ECF? Is it similar to calculating share price of publicly traded companies?
I can take that. So also remind me on the previous questions when people ask about how it comes to the risk exposure when it comes to investing in ECF and P2P, and I operate both of the platform. And back to the question is, first thing first, as investors, you have to make your own investment portfolio. So my peers speak about risk exposure. So if it's you will always have to put your capital in high risk, medium, middle risk, and low risk. And Now that you know that ECF and P2p have no capital protections that should put in your investment portfolio under high risk for ECF, to me, I treat P2p as middle risk. Like it also depends on which stage you're investing. As in ECF, you're investing in very early stage company that should be very high risk. And so you look back to your portfolio, okay, I already investing 20% of the total capitals that I have in high risk. So it's a time you rethink if you still want to put in the high risk portfolio. And whereas if you're investing in pre-IPO or a large scale high growth companies, you can, and you know you know very well the business, you are even part of the business, that investment I can say is a low risk or middle risk. So the question is back to the investor, to how much he can soak in, how much he can lose the money, and what is his investment portfolio.
Right. Okay.
Yeah. If I can just add very quickly,
Sure.
the point to make about equity crowdfunding is also that it's a bit long-term investment. So if you're looking for immediate capital growth, that's not going to happen on equity crowdfunding platforms. So if you're looking at 3 to 5 years kind of performance, you will find that there are plenty of deals on Pitch In, and on all the other platforms that have grown, right? So these companies have grown, and typically you will know that your capital has increased if the company, for example, have done another funding round, as Angel mentioned. If they've done another funding round with a VC, and the company is now valued higher, so you can say on paper your capital has grown. There have been some exits on ECF platforms also, in which case investors have made money, so your capital has grown. There have been dividends also given, so you'll find some returns coming in. And also one last point to make is that by next year, you can expect to have secondary market also opening. So that will be another way for you to value your investment. But my advice to investors is always keep following the company that you have invested. Ask them for their information. They are supposed to report to you regularly, and companies do report as far as you know, and you will then be able to know how well they are doing.
All right. Okay. Thanks, Cash and Angel. On the next question, it will be how stringent is the due diligence performed by P2P and ECF provider to ensure investor funds are protected and default reduced to minimum? Perhaps we can start with P2P this time.
Yeah,
Sure.
go ahead, Matthew.
Okay, thanks, KB. All right, so for us, I think we did mention earlier, the main thing is, especially in the microfinance side for microlead experience, is that we do something called psychometric testing, other than the strict due diligence that I've had to say all operators are doing, is that we do psychometric testing to test the willingness of the issuer to pay. So sometimes the financial statements may look amazing, or even if the bank statements are also good, the willingness to pay is actually really important. And for the thin files, we call the thin file issuers, we call it, that one, this psychometric testing score is also very important and very key on our assessment, including, of course, our Experian PD score, probability of default. That will also go into our credit rationale. And if they go to our website, they can clearly see that on our issuer's exact page. So that should be able to cover it.
Right. Okay. So there's also a question on P2P financing and whether it's Sharia approved or not. Perhaps, Matthew, you want to answer in terms of Sharia compliant notes on P2P?
Sure. So what we do for microlead is that we put it on the back of a trade, and we do keep all the master commodity murabaha agreement right up to the certificates of what exactly the trade was done on. Could be either crude palm oil or crude oil. And that is actually how we keep it Sharia on a commodity murabaha tawarruk arrangement. And because we absorb all the fees, whether as an investor you invest in a conventional note, you get P plus I, or if you invest in Islamic note, because all the wakala fees and the commodity brokerage fees are all absorbed by microlead, then your Sharia compliant investment will be the same. It will be whether you invest in Islamic, you get principal plus profit, and if you can invest in conventional, it's principal plus interest.
All right. Okay. So the next question is okay. So someone's asking if an issuer has defaulted payment in their P2p financing, how is this reflected in the risk rating and their eligibility to remain as an issuer on the platform?
Generally, if we know that any issuers have defaulted on their P2P financing, speaking on behalf of funding societies, we will not put the issuer on platform for crowdfunding.
All right. Okay.
Yeah.
Okay. And someone is also now asking, are the panelists for are the panel? I mean, do you guys do regular webinar to educate retailers? And where should? Yeah.
Yeah. Okay. I can. I'll take that one. For Microleap, we are just starting. So first one did pretty well, 25,000 views. I'm quite surprised. But then, yeah, I think that should be the case for, I would say, in Microleap's case, and I think most operators, it'll be good to have this kind of FB live sessions and all the we answer all the Q&As there on the comment section. So you can, even if you missed it or you want to go back and view it later, you can do that and go through the comments lah.
All right. Okay. Good. All right. Okay. So we are running out of time. We've got like 3 more minutes. So I'm just going to take like quick questions. Someone's asking about the fee. Can we know about the fees for investors on ECF and also P2P?
I'll just take the question on fees. I think every operator has got their fees, which they charge. But globally and also in Malaysia, the pattern has been that you can say that ECF fees average at around the 0.05 to about 8% for smaller deals. As far as pitching is concerned, we have on record our list fees are 5 to 7%. For the success fees when the company successfully raised funding, now that deals are becoming larger, the Securities Commission has now allowed companies to raise higher amount. There's obviously some room for negotiation, but we are looking at those kind of fees, probably about 7% and below. There's always an onboarding fee. Pitching charges a small onboarding fee, and I think that's about it. I think the most important point to make is that I believe in all platforms, ECF platforms, they mostly work on success. And so if you do not manage to raise funds, you actually have not spent any significant amount of money.
All right. Okay. I think I'll just take the last question from the down the list. Does ECF platform audit the company's performance and account to make sure that it's not misrepresented?
Okay, I will just this question come back to due diligence again. I think 2 points to make very quickly. One is also remember that the reputation of every platform is at stake, right? So if we bring companies that don't do well onto our platform, our standing will also be affected. So I think investors should rest assured that every company pays serious attention to due diligence. So we do look at the finances, we do look at everything. That's one point to note. The second is, do we continue to follow their performance? Yes, we do. And speaking for Pitch In, if you go to our website, you will find that every year we actually publish an annual report that shows the financial performance of the companies that have raised money on Pitch In. So yes, we are investors ourselves. We know how important it is to keep track of companies. So we do keep track of companies. I think the power of the crowd itself will help also to keep track of companies. So yes, it's important to do that.
All right. Okay. So we've got a lot of questions that actually went unanswered. If these investors or also perhaps like interested business owner want to know more, they can access the platform providers, right? I mean, you can go to their websites. You can go to SC website as well, and to look at the list of ECF and also P2P operators that we have, and go on their website. Make sure you are on the right website before you make any investment, and you can ask for the questions there. So the time is now up. Thank you so much, everyone, for the discussion today. It has been a very insightful and informative session. For business owners out there, do reach out to these registered ECF and P2P platform operators to explore financing options. And for investors, I hope you can make use of the knowledge and information gained today from this session to explore the investment avenue further. Thank you for joining us today. Please answer the quiz on the side of this screen and to win some vouchers. And also massive thank you to our speakers and our audience for the insightful discussions and also the questions that came in. Thank you so much, everyone.
Thank you.